On the show today, Zambia plans to swap Chinese debt from dollar to yuan. Another fuel price increase in South Africa takes effect from today. Plus, Sudan lowers customs exchange rate to £15 per dollar. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. First, the markets. And here on the African continent, the Nigerian stock market reversed the positive move at intraday to drop 0.19%. The JSE index was the only winner, up 0.64%. Egypt was down 0.36%, and Kenya closed marginally up on Tuesday. And in the Middle East, the arrows were all red at intraday. Abu Dhabi led the losses by 2.17%, followed by Qatar, down 1.26%. And stocks in Europe hovered around the flat line in the morning as market players wait for clarity from U.S.-China trade talks. U.S. Secretary of State Mike Pompeo said on Monday he thought Washington and Beijing were on the cusp of reaching a deal. Well, let's join Ulrich Bartner, my colleague, on the floor of the Frankfurt Stock Exchange for more. Hello, Ulrich. A beautiful afternoon to you.
Yes, thank you. You too. The sun's shining here for a change.
Oh, actually, it's looking like a rainy day today here. Anyway, despite positive comments from different members of the U.S. administration, market players are yet to find out how far-reaching the U.S.-China trade deal could be. How is this conversation coming up where you are?
The hesitation that you see in the market is a clear indicator that people are afraid to take risk with this important question open. There are some other risks as well, like Brexit, but certainly the trade deal is one of the make-or-break issues for the economy and for the markets. When you look at the trading here in Europe, it's a sad picture. Only Milan is going up a little bit more, but even so, less than 0.5%. And the other markets are on the unchanged side, either a little bit plus or a little bit negative. And the Euro Stoxx 600 is unchanged. And that's a sign of the lack of willingness to take on risk. There is a piece of news that lets people hope a little bit more. China seems to be at least addressing U.S. concerns about intellectual property rights. It says that it's going to pass a law, a decision in the People's Congress to prevent the state from interfering with companies and asking them to turn over intellectual property for market share. A step in the right direction. Everything we hear sounds vague, but it is something that maybe will lead to a trade, will help contribute to a trade deal in the end. Let's put it that way.
Well, in the meantime, news from China seems to be giving the market something to chew on. China's state planner said the government will boost domestic consumption further this year, with Beijing announcing billions of dollars in tax cuts and infrastructure spending to reduce the risk of a sharper economic slowdown. What's the reaction?
Well, the reaction is not all that great. Only Shanghai, the market there, went up by any measure over 1%, but the rest of the Asian markets basically turned a cold shoulder, as does Europe here. It's not reacting to that news as well. It's perhaps understandable because it's more of a negative sign. I mean, China has already poured billions and billions into the market. The central bank has done a lot, and still the growth rates are going down. I talked to an economist about that this week, and he said basically, you know, it is a sign that the Chinese economy is maturing. He's not surprised. And the state wants to do something. That's understandable because of the political dimensions. But, you know, with a mature economy, people can only buy so many cars and have so many phones, and then there's a certain glut in the market, and growth rates do go down. So it can be understood as a difficult sign as well.
And U.S. rate policy is also in focus. Tonight, the Fed will release the newest Beige Book. How might that play out?
Well, I think the Beige Book can turn the market. It can inject a negative note or a more positive note. I have the feeling, talking to market participants here this week and last week, that people, all in all, regardless of what they see and what the source of that is, who's talking, they're more ready at the moment to see the negative side of things than the positive side. So if the Fed outlook gets better, I suspect that people will more likely look at the negative effects on rates, perhaps, that the Fed might step on the aggressive gas pedal again. And if the outlook is poor, then they'll say, that's not good for companies, that's not good for the market. We'll see tomorrow.
Sure. We'll keep a tab on that document and see what comes out of it. Thank you very much for your time, Ulrich. And in Asia, mainland Chinese shares bounced strongly as markets took hope in stimulus measures announced by Beijing on Tuesday. The Shanghai Composite surged 1.57% to close at 3,102 points, and the Shenzhen Composite jumped 1.49% to close at 1,660 points. Hong Kong's Hang Seng Index also traded in positive territory, adding 0.17%. The rest of Asia was more subdued. Japan's Nikkei 225 declined 0.6%. In South Korea, the Kospi slipped 0.17%. Australia's ASX 200 rose 0.64%. And U.S. stock index futures were low as market players remained focused on U.S.-China trade development. At around 2:11 a.m. Eastern Time, Dow futures fell 48 points, indicating a negative open on more than 22 points. Futures on the S&P and Nasdaq also pointed to a lower open. Wall Street ended Tuesday's session low as investors continued to search for clarity in trade negotiations between the U.S. and China. This remains the biggest topic that stock investors are watching for. On the economic front, there will be ADB employment numbers at 8:15 a.m. Eastern Time and international trade figures out at 8:30 a.m. Eastern Time.